Be Wealthy and Smart, episode 1038.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to be talking about why we may be near the bottom in the markets. Now, this is a very unpopular opinion because right now, everybody seems to be in the bearish camp. On television, on CNBC, all they're doing is talking about why a recession's coming, why everything is so terrible, why the market hasn't bottomed. Everything's very, very negative. As I said in an earlier podcast, everything is so bearish, it's almost bullish, because being a contrarian means you go against the herd and you go against the crowd, but we also look for additional evidence. It's not just being contrarian, but I'm just saying the negativity is really palpable and almost nobody is positive. You almost get hammered in social media if you say anything positive. That's how negative it is. So why then do I think we may be near a bottom? Well, first of all, when I look at the credit markets, the bond market is signaling that things are healthier than what we're seeing. If we were going to see a lot more tightening and high inflation, well, the bond market would be showing that. Literally, it would be falling apart. Interest rates would be still rising sharply, and bond valuations would be continuing to decline. But that's not what we're seeing. Now, when we look at indications of inflation, we're seeing little early signs that things are just starting to slow down a little bit in inflation. And that's all you need to see, is that things aren't getting as bad as people expect. And that is going to start turning the expectation that things aren't quite so bad, and that the market doesn't need to continue to go down and price that in. We're seeing some very positive signs like profit margins staying at all-time record highs, capital spending at record highs, consumer spending really strong. And remember, consumers make up 70% of the economy. So if the consumer is hanging in there, and that's because they are fully employed, have a job, and have good wage growth, well, that's all positive. We're also seeing balance sheets in pretty good shape, and companies are increasing productivity, which is the biggest problem when you have a labor shortage. You need to spend and invest to get more productive and replace those workers that you can't hire. So whether that's investing in AI or some sort of machinery, equipment, you do what you need to do to try to lessen the amount of workers that you need to hire when you have a shortage of workers. When we look at valuation, with the NASDAQ down 23%, the S&P 500 is about 18 times earnings, which is not really that bad when you're looking forward for 12 months. If you take out technology, it's at about 15 or 16 times earnings, which is very reasonable. Now, this coming Friday, we do have an options expiration date, and that's my pick for where we'll see the bottom. Once all the options expire, that's where I think we're likely to see a turnaround. And if I had to pick one day to say where are things going to be better, and when might we see a turn, it would be Friday, May 20th. And while I can't guarantee that date, I will tell you that's my target date. And I'm not seeing a recession being priced in either. I would say we're around a 25% chance of a recession. I'm not seeing that. I don't think we will be having a recession this year or next year. We had that negative GDP came from more of an anomaly of all the numbers being put into one quarter, and I don't see that being repeated in the second quarter. So I'm very positive that things are getting better. We're not going to see a recession. this year. We're not going to see one next year. We have a strong consumer, strong wages. We are going to have the Fed continue to be hawkish, but the economy's in good shape, very strong, and I believe we're about to see a rip-roaring bull market with tech stocks leading the way and even going to new highs. So I'm very positive about things turning. I think we just need to look for it, but it's not too far out into the future. So if you're doing some bottom fishing, this is a good time to be doing some nibbling. Of the 3 stocks that we've been following here that have talked about stock splits, Tesla, Amazon, and Google, the best value right now is actually Google at 14 times earnings and really strong revenue. That's looking like the best value to me. So overall, I think things are looking a lot better than what we're hearing. In spite of all the pessimism, I'm very optimistic, and I think it's going to be showing up in the markets very, very soon. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.